Hey, Steve, Jamie, what happened today?
What's up, Scott? Thank you. Steve, well, we
Yep.
had quite a bit going on today, didn't we?
Um, I guess so. Kind of a fake out for some
Yeah,
people. It depends on who you are. I will talk about that.
absolutely. And welcome everybody to the first office hours of June. Today is June 1st. I guess summer hasn't officially begun, but it's not too far away. So we're into June and welcome everybody. Got a nice little crowd here today. So without further ado, let's just get through the legal mumbo jumbo real quick here. We're all big boys and girls here, but always feel compelled, occasional purposes only. So if you do need advice on what to buy, what to sell, when to do it, basically if you need investment advice, please seek out someone who's licensed to dispense that type of information, like a registered investment advisor, Series 7 stockbroker, all that good stuff. So once again, all the information that we share with you guys is for educational purposes only. Now, we always like to start off at the top of the hour here, especially for the new people. We have quite a few of, I'm assuming, since we just came off a very big test drive a couple of weeks ago. Not only do we have the award-winning state-of-the-art technology that is TI Pro, we've built quite the community around it. All gets kind of started off up here in the upper left-hand corner with our trading room hosted by Barry Anderson, which, by the way, is free of charge. If you searched around out there, you probably realize that any trading room worth its salt is not going to be free, but ours is. So that's one of the added benefits that you get when you're part of the Trade Ideas community. Could be 300, 400, 500 people in there on any given day, everybody from beginners to advanced traders. But other than the price, the best thing about the room is our moderator and team member, Barry Anderson, who does an excellent job moderating, keeping the riffraff out and showcasing the way that he uses the technology and his trading style. So if you haven't been taking advantage of the free trading room, get on in there and see what it's all about. Of course, today is Mondays. We got office hours with myself and Steve. Steve's going to take the steering wheel for Tuesday, 5 p.m. Eastern webinar with the Trade of the Week webinar, and Andy's going to ride shotgun with him. And then we have Hump Day. Wednesday rolls around, we bring in our CEO and founder, Dan Merkin, along with our Chief Technical Officer, Brad Williams. Always fun with those two, typically getting a peek of any new bells, whistles, features that might be coming down the development pipeline, along with Dan and Brad's own flair there. And then we round out the 5 p.m. Eastern webinars with Andy's Trading Studio on Thursday. I ride shotgun with him. And of course, our every weekday, growing in popularity, daily support session, which is Monday through Friday, running from 12 p.m. to 1 p.m. Eastern, where it's an open forum and you have a different trader in there every day answering your questions in real time. So a great webinar circuit we've set up for you guys. There we go. Here's the URL. It never changes. It's trade-ideas.com/live. Once you get there, you can bookmark it because that's where it's going to be each and every day. Same bat time, same bat channel, Monday through Friday. And of course, do people get utility out of our AI modules? And if we're using user count as a metric, well, then the answer is definitely yes. Don't quite have 2019 in there. Maybe someday we'll add that bar, but I can tell you this, 2020 is going to be a big blue bar as well. Now, in addition to the AI coming on the scene back in 2016, new technology that we've recently, or I say recently, feels like yesterday and feels like forever sometimes, that we launched Brokerage Plus, which is the add-on that allows you to use our interface, Trade Ideas Brokerage Plus, to execute live trades, paper trade, automate the AI, paper trade the AI, do your own strategies, basically any type of trading that you would want to do. And we can see live executions in blue, and orange is representative of demo orders filled. And these values just keep going up and up and up every month. I do know that last month, we set another record for live executions. So that's letting us know that yes, people indeed do like it, they find utility in it, and they are using it and using it more and more each and every month. So if you haven't been getting busy with Brokerage Plus, you might want to jump in there and do that. It's a great way to paper trade as well as live trade. All right, on to today's agenda. In keeping with tradition, it's time for Mr. Steve to take the steering wheel here, and he's going to go over some of the major tracking ETFs. So I'm going to go ahead and kick the can over to you, Steve.
All right.
And you are now the master of the can.
Well, let me clear the unicorns and bronies off here. All right, there we go. Hello, everybody, and welcome back. It's been a few weeks since Jamie and myself have done here a Monday webinar. And as he said,
I think like 3 weeks, yeah.
Yeah, I'm sorry, a few, 3. Well,
Yeah, feels
yeah,
like forever.
It does. We almost got off next Monday too, but that's a story for another day. Which, by the way, Jamie's got a great tease. I almost said it, but I'm not even going to go there. So stick around for something that Jamie has to talk about, especially for people who have low or lower balance accounts. It's going to be a very interesting, very good announcement. But my portion is to talk about what I see technically here in the market. I always start with the S&P 500 ETF, the SPY, so we'll start there. And it's just continued constructive behavior, whatever you want to call it, price action. Every little hurdle, which, last time we spoke, I said this was very ominous, 200-day moving average. Well, 1, 2, 3, 4, 5 days of closing prices above that level is very significant. Moving average of the 10 period is coming up to meet it after a bit of consolidation. This is about as ripe, poised as you could probably put it there, bird in the hand, ready to probably take flight. There's really no bear case to be made, and everything that's been thrown in front of this juggernaut, including this weekend's disastrous images on the TV and all that. I've been a short seller before, and I'm sure the short sellers were just kind of rubbing their hands together, thinking that this is finally it. We're going to get the big market break. And the futures gap down last night at 6 o'clock, and then never really followed through and turned back and just continued to grind higher. That's all this market knows how to do, is just put money to work, regardless of what the market, the news is saying. So if you're one of those people that just keeps cursing and throwing your shoe at the TV because the unemployment rate and 38 million people unemployed and 3 trillion added to the Fed, no, it makes no sense whatsoever. But the only thing that makes sense is the price action, and the footprints in the sand are just telling us there's no bear case in sight. Let's look at the NASDAQ, the typical leader. I say it's the leader because, respectively, its 200-day moving average was breached long ago, and its moving averages have been fanned out now for a little bit. There's no bear case to be made whatsoever. You had a nice little reversal attempt there with a strong candle pushing the price back into the action above the 10-period moving average. No reason to be short this market. This is not the time to be short this market. Look at what we've got coming up here, an absolute full recovery. I'll just draw that line, a full recovery. This is our next hurdle. We've put hurdle after hurdle in front of the price action, as I said, and it just keeps finding its way through. Now, maybe up here we do get a little bit of that stone in the wall, and we start to get that cup and handle look. That's basically what a cup and handle is, a deep dive, hit major resistance, pull back the troops, give them a warm shower, and pull back on the battering ram and try it again. Maybe up here you're successful. Down the road, we'll see. But there's really no case to be short unless your timing is perfect and you have a magic wand and you know something we don't. The same goes for the IWM, the Russell 2000. Its next big benchmark is going to be the 200. It'll probably have a date with that soon. We'll see what happens. Same with the Dow. These two are lesser ETFs than the first two we looked at, the S&P and the NASDAQ. But they're still showing constructive strength, and they'll probably have a date with their 200-day moving averages here very soon. We'll talk about last week's trade of the week, since it hasn't really been talked about much. It was a different type of buy. It was wait for Amgen to pull back and taunt this 50-day moving average there in blue, and it did it perfectly and gave us a perfect rejection candle. So hopefully people that were waiting for that and read that topic of that email looked at this day as the day wore on and saw that the rejection early in the morning. I'll just quickly show you. It's important to see, that there was our big selling day right there. You call that capitulation right into the level that we were looking at, and then some, and then the reversal. Those are the kind of things you can take home. We'll talk more about that tomorrow. And then lastly, before I give it back to Jamie, the trade of the week this week, if you didn't get the email, it hasn't triggered yet. It's that blue line we were just talking about charts that have no absolute bear case to be made, and this is one of them. We've got a really nice price action. There's a nice reversal candle kicking the price back into play, and the 10-period moving average has something to say about it. A perfect doji today. I'm just saying, don't lose track of this one tomorrow. This is the semiconductor ETF. So if the semis are strong, if you look up tomorrow and see Intel and AMD and AMAT and all these semis are strong, guaranteed this thing is going to be much higher. So a very defined point there. It's around 142.15, I think. You might want to just use your trade ideas, right click, create a price alert at that level, 142.15, and then if it triggers, you won't miss it tomorrow. And you know, you got to swing the bat at something. You might as well swing the bat at something like that. So I'll be watching that as well. And actually, I'm already kind of participating a little bit, anticipating, and if it goes, I'll probably add to it. But that's all I've got, Jamie. You're back online if you want it.
Very good, sir. Thank you very much for that. Let me grab this back here, and we should be off to the races here.
Yep.
All right, we're going to go through a little bit of my bread and butter kind of compulsory routine that I like to do every morning. And those of you who are regular attendees know what I'm about to talk about. If you're new, what I'm alluding to here are expectations for the session and consulting my favorite compare count window, which is, well, I thought I had it visible here. This little guy right here. Okay, notice the title here, Big Cap Movers Upside, Big Cap Movers Downside. What does big cap mean to me? Well, we're just looking at stocks where the market cap here is 4 billion or greater. So you can't see all the zeros there, but there's 9 of them. So what we're looking for here is I track this window in the first 15 minutes of every session, and we're going to track those stocks as they hit, whereas they meet this filter set here and hit lows, and on the other side of the coin, as they hit highs. We're going to keep count of those things with a little added pepper here in the form of accelerated 1-minute volume. The theory behind this is trying to get a peek or tell, I guess for lack of a better term here, of what the institutions might be up to for the day. So are they going to be doing more selling, or are they going to be doing more buying? Because typically that's what's going to have the biggest influence on the market. I can't say 100%, but we all know that it's really the institutions that kind of control things, just, you know, based on the large volumes of selling and buying. That's what's going to make a stock go up or down. So by paying attention to what the readings in this window is after the first 15 minutes of the market can sometimes, but not all the time, give us an idea of what the overall market might do, and that is certainly beneficial. Worked pretty well today, so let's take a peek here. Go ahead and pull the SPY up here on the 15-minute intraday. And here we are. Here's the opening candle right here. Now, what did this window show me today after the first 15 minutes? Well, I dump these readings out into my Twitter feed every day. And here's what we had after the first 15 minutes today. We had 59% buying versus 41% selling. Now, a little word about the numbers here. And, when I pay attention, when my ears really perk up, and when it's just kind of so-so, okay? So 59% green today, yes, my eyebrows raised, my ears perked up. I was like, ooh, especially considering the fact that we had it was a little gap down, but a gap down nonetheless. We started off a little bit negative and quickly filled this little gap here. So when I saw this after the first 15 minutes, here's the opening 15-minute candle right here. 59% is a pretty good upside bias. It would be a pretty good downside bias too, 59%. Typically what I look for is anything above 55%. And the more above 55% it is, the more I'm inclined to think that, well, this is the direction that we could head today. So 59%, not a bad bias. Of course, when they get up into the 60s and 70s, even more so. But just keep in mind, those of you who've been around for a while, you've probably heard traders say that, I make a little bit here, I make a little bit there, but there's 3 or 4 days a month where I can really be aggressive and really clean up. Those are the days where you're going to see the 60s, high 60s, maybe getting into the 70s, and on a rare occasion into the 80s, but we typically don't see that. But the
Did
bottom
you
line
ever
is
get
this.
the pointer toolie thingy?
You know, Steve,
Pen?
guilty as charged, okay? I've
Oh,
got
you
it.
better
I
explain that to
haven't
Randy.
been using it, so for the user's benefit, I'm going to make an effort to really start using that thing. I'm just too clunky with it, but practice makes perfect, yes. So, okay, the gauntlet has been thrown down. I'll start using my Epic Pen or
Randy will be so
training
happy.
with it, right? I can teach people how to use this complex software, but when it comes to Epic Pen, I'm kind of lame on it.
Yeah,
So
it's tricky.
it is. But hey, for the users, I'll do it. I'll make that sacrifice. Bottom line is a nice 59% bias, and we can see right here. Check out what the market did after this first 15-minute candle here. A nice little grind higher for the remainder of the day. Gave back a little bit towards the close, but hey, what a nice leading indicator. What a nice little bird to come along and go, hey, 59% accelerated buying versus 41% accelerated selling in the first 15 minutes, giving us an idea of market direction. Okay, so that's how the day was started here. And then we're also going to notice a correlation in how well the AI did as well. So that's what happened with the compare counts today. And let's get on with the rest of the show here. So we're going to start off talking about Holly the AI, do the Holly recap here. We had a total of 14 signals from all three modules, 10 and 14, 4 on 1.0, 6 from Holly 2.0, and of course the standout today, as it has been recently, of course, it can be the standout to the downside too, was Neo, okay? Neo being the more aggressive of the three modules, only kicking out 4 signals and in moderate risk mode, a nice little point total here. And once again, these windows are reflective of trading 100 shares per trade. So we could just call that about 3.25 points that Neo was up today. 2.0 up right about a point on 6. And coming in last today, the original 1.0, the old gray mare, kicking out 4 and just being a little bit better than flat, up about 1/5 of a point there. So let's take a look at some of these trades today, because there's a couple of different trades that we can look at here, or I shouldn't say trades. I mean, we will be looking at trades, but different types of ways you can utilize the AI and the signals that it generates. First and foremost, it's when, you know, a signal first comes out, a lot of the times they go right off the bat. But just like we humans making manual trades, hey, everybody likes immediate gratification, but a lot of the times these trades will flop around right at the break even. We might have to sit a little bit of red before we get the lift that we're looking for. So without further ado, these two types of trades I like to call conservative versus moderate spread, trying to pluck some of that spread out. And here is my conservative profit column right here. Make that a little bit bigger. Just made the other one smaller there. Hold on. And we've got moderate profit and aggressive profit. So you can view all the risk modes and all the profit columns in the all trades blotter here. So let's talk about how we could potentially extract some of this spread on some of these trades. Now, real quick here before I move on here, what exactly does conservative profit mean? Okay, obviously it's the most conservative risk mode that the AI uses, and there are 5 different reasons why a trade would be exited. And we can see in the conservative exit column over here, those reasons: profit save, a timed exit, reduce risk, a stop is hit, or a profit target is hit. We don't have any profit target hits today, but all in all, we got 5. Stop loss, profit target, timed hold, and then the 2, I like to call these audibles that the AI can call, can exit a winning or a losing trade early, profit save, and reduce risk. So here, why did the AI close what looked like a very beautiful trade and only make a flat in conservative profit mode? Well, here's the trade right here on the chart. We can see the entry signal right here. Now, a couple of things I really like about this signal right off the bat. This was quarterback, okay? So I've drawn a line here. That's right when it broke out of its opening range and it was gone. But guess what? It pulled back to that level, lined up pretty perfectly there. 15.92 on the entry price. And then this little shaded square here, right here, is the time spent in the trade in conservative profit mode. So we got a nice little lift. We came back down, just kind of started ebbing and flowing around the entry signal here. And the AI was like, well, this thing was working. Now it's not working. So I better go ahead and close the trade out. Okay. And took a flat. Reminds me very much of me sometimes. And some of you out there can go, yeah, I can relate to that. You get nervous, you get bored. You're like, okay, I'd rather just flat the trade here than lose money, right? But we can see here, what did the trade do after the AI closed the trade out? Well, if you would have held this thing into the close, that's what moderate as well as aggressive profit are showing us. $0 gleaned versus $195 made. And by the way, all of the trades and the data and the pricing that you see here on this all trades plotter, I'm risking $100 per trade. Okay. Now you can set that at any time by going to your TI toolbar here, clicking on Tools, Options, and then popping right over here to the AI trade size. So if you'd like for your numbers to match up exactly with the channel bar over here, you'd have to put it on 100 shares per trade. Then your numbers would match up exactly with what you're seeing over here. I like to run mine as $100 risk-based stops. So based on the stop that is assigned to each trade, the system will size you into the appropriate share size that you see right here. Oops. Hold on, I lost my sort there. Okay, we were looking at MAXR there. So the bottom line is 398 shares holding into the close would have gleaned 195 bucks there. Now, how could we have made the decisions to stay in this trade when we see the AI getting out? Well, we're just right here back down to the entry line. Okay, had a little bit of a lift. We're back down here now, but a couple things. Everybody's going to have their favorite indicators or studies that can also help them in this decision-making process. But the bottom line is this: once the signal occurred, a little ebb and flow right at the entry signal is not necessarily a bad thing. In my book, it's a good thing. Now you can also see the green line here, which is a moving average, which is the 10-period simple moving average. Introduced to me by Mr. Steve Gomez himself, and turned a lot of people around here on to the 10-period simple moving average. And one of the nice things about it is when a stock is in play, a lot of the times this is going to be the guiding hand that we can use to figure out whether we should stay in or get out. Now we can see here we never had any candle closes below this 10-period average until the very last 45 minutes of the day. Hey, everybody that traded the stock was up, going to be a little profit taking, nothing wrong with that. But all we had to do here when we saw the AI making the exit on MAXR and that profit save is just stay in it. Hey, I realize the AI is making an exit signal here. I like the trade. It's just kind of hanging out by its entry signal, never really acted like it was going to stop us out. So therefore, I'm going to accept more risk and stay in the trade. Big difference between 0 and 195 bucks. A lot of the times, as you're getting used to this process, you can use what we call the 50-50 method. All right, you know what? I'm not sure how I feel about this. Maybe you're new to chart reading, right? So I'm going to do half and half, right? If I was long 100 shares, I'll get out a half with the AI. I'll stick to my original stop with the second part because I like what's going on here. And until I see a close on the 15-minute candle below that 10 period, I'm just going to stay in it. Okay, and that would have served you quite well. So whether you do the whole lot or the 50-50 method, it's a great way to get used to trying to extract a little bit of conservative profit and moderate profit spread there. So not a bad trade in MAXR. Right here is another little interesting area. If we're already in some with the AI, we go up here, we pop new highs again, we go to sleep for a while, a little consolidation area here, all still while maintaining the 10 period. And then we've got another little break here above this 1, 2, 3, 4, 5 little consolidation that formed over about the past hour and 15 minutes. This would have been an excellent time to add to this position because we got the nice little consolidation. We got a break above. This thing wasn't doing, crazy volume today, but it was doing well over average, finishing the day at 1.37 on the relative scale. So not only was this a nice entry signal that worked, but there was also an opportunity to add to it later in the day, which if you're a new trader, you might have heard about this. Hey, let your winners run. add to your winners, cut your losers when you're supposed to, but it's not really easy trying to figure out when to add to a winner. But simple chart pattern like this, little consolidation, another range low risk. All right, Steve, any questions I need to address right here, or just go right on to the next one here? All right, quarterback kicking out another choice entry here in WCLD. Once again, we're going to focus on conservative profit versus moderate profit. AI only took $37.80 out of this one. Now, this one was a different exit reason. And I'll just back up a little bit here and say the AI's real strong suit, if you had to say what is the AI superpower, it's the entries, okay, first and foremost, because all of these entry signals, original signals, have statistical probability behind them, backing them, which is no guarantee, but it's one of the closest things that we have to certainty is math. So timed exit here. Well, what was the timed exit? What does that even mean? Well, if we look at the quarterback strategy down here, WCLD, we can see quarterback was designed around a 45-minute hold time that we can see down here. So on WCLD, didn't get a stop out, didn't get a profit target hit. It simply made it through the hold time. 45 minutes, it's going to get out, which is what it's programmed to do. So a nice clean entry right here. We can see the shaded area once again is time spent in the trade. And then look what happens in the following candle right after the AI exits, okay? We get that second uptrend there, that nice little range break, what I like to call an auxiliary pattern playing out. This was the original signal on a pullback, but then we had a nice little hour of consolidation in here and a nice little range break. So once again, we could have played also again a very nice, it cracks this opening range break and heads higher for the day, heading on into the close. Could have pulled out $129 at the close and maybe just a little bit more if we would have sold in the last hour and a half of the day there. So a great signal pop, and then this would have been a great time to add to that position as well. Now, not a whole lot of spread here in conservative profit and moderate profit in this ABIO short trade here, but just wanted to pull it up because it was a beautiful setup nonetheless. This trade occurring, getting short right here at the 9.99 level and just doing nothing but work from that point on. Kind of hovering right below the entry signal here, which is good for a short because we want that stock to go down as opposed to up. But then you can see here, this is kind of the pattern of the day, whether it was long or short. We had a lot of these things consolidating after the AI signals, which make for great add-ons. Okay, adding to the position. Once we see a nice little calm consolidation area right here, and this break right here, and I'll just put an arrow there since I'm a bad boy and not using my pen today. What I'm talking about is this little area right here. As we broke down again, AI signal back here, a nice little break would have been a great time to add to that position because you could have accepted very little risk if you use the top of this consolidation area as your stop on an add in there. Okay, it looks like you're knocking out those questions, Steve, so we'll just keep on going here, but got up and boogied very quickly at 594. Turn very quickly in the AESE today, and they're pretty much all back. But check out of it, but really once we got these closes below that 10 period, look how it just tapped it down for the rest of the day. Okay, John, I see your question about the AI. The question is, does the AI go through each channel every night? And that is a good, it doesn't go through any of the channels. What it does, it has a strategy bank of about, it's always fluxing a little bit. We'll just call it 30 to 35 core strategies, which are strategies with very big sample sizes that have very good statistics behind them already. In other words, winning more than 50%. So every night after we import all the tick data for all the stocks in the market into the database tonight, what the AI does is it takes those core strategies and it starts to optimize and backtest them, trying to improve upon them, trying to generate a good data set, much like what you see in today's strategy panel here. with very high win percentages and really good profit factors, okay? So we've developed a proprietary scoring system, which after all that analysis is done, each one is scored after the AI tries to improve upon the back test. And it's only the ones that meet the minimum on our proprietary scoring system that will make the cut for the next day. So tomorrow we might see some of the same strategies in here, or we might see some of them gone and new ones show up. But even if tailwind shows up tomorrow, it's not going to be the exact same tailwind that was present today because the AI would have modified it in the interim based on today's tick data. So hopefully that makes sense. And yes, all of these guys down here are strategies. Of course, quarterback is one of those strategies. Not only can we see the name in the strategy panel too, but notice that this is my all trades blotter for the AI. And anytime a signal is generated, we're going to see the module that actually generated the signal, and then we're going to see the strategy that generated the signal as well. That is correct. AI is only part of the premium subscription. All right, so that's pretty much it for the extracting the spread between conservative and moderate profit. Of course, we're looking back in retrospect. Obviously, we're not going to know what the end results are here. We're just going to base whether or not we're staying in that trade based on what the chart is doing and do we like what's going on up there, okay? The other type of thing I like to cover is what we call a trade around, okay? Campbell's soup is a good example of a trade around today. It was something that got stopped out, as we can see over here in the conservative exit reason here. Had a buy right here at 51.45 and didn't take it long to shimmy on down to the stop level here. So the AI's original signals, sometimes they go sideways for a little bit and then go, sometimes they get stopped out. But a lot of the times when we see the AI making an exit, whether it's profit save, timed exit, reduce risk, it's probably worth pulling that chart up to see what's going on. In this case, what we had was a stop out. We had these two bottoming candles shortly after the stop out, the 9:30 Central Standard Time candle, 9:45, so up until 10 o'clock. It went a little bit past the stop here. Then it reclaimed this area and put in this nice little bottoming wick candle on the 15-minute period. All right, so we saw the stop get penetrated, bottomed out down here, well, not once, but twice, took a little leg up, then made this little, not quite a hammer, but that long wicking candle here. So when I see things like this, especially after a stop out, I'm thinking to myself, well, the stop got everybody. Doesn't matter if it's a robotic trade, an AI trade, or if this was a manual trade, sometimes the stop is just going to get us. And then it's going to turn and go the other way, just like what Campbell's soup did today. So even though the AI got stopped out in it, if we're paying attention and we see this nice little bottoming area right here along with this wick bottom, a lot of the times we can go ahead and go, you know what? Sellers couldn't keep control down here. They tried again right here and it wicked right back up. So I tell you what, I'm going to go ahead and get long in Campbell right about in this area right here. I'm going to get a much better price than the AI, and I can use this level down here as my stop. So let's just say we would have got long around 50.80, 50.49. We'll just call that 50.50. You know, a little over a 30-cent stop on a $50 stock is not a bad risk, okay? So we could have risked less and got a better price than the AI, just waiting for a little bit better entry, okay? I like to always, and you regulars are probably getting sick of me here, use this example here, but we used to do the same thing, Steve, Andy, Sean, myself, except it was in real time and in real life with real people. It wasn't the AI getting stopped out of something. It was a human being in the trading office that we used to have to go to before, you know, before the new age of technology kicked into effect, 90s. You know, you had to go to the office to get the technology, but all sorts of people were up there, and you'd always hear this person complaining about getting stopped out or just about to get stopped out, and then we'd look at the trade and go, hey, it looks really good now, you know, take advantage of the information that that person was sharing, not for sharing purposes, but more or less for complaining purposes. Well, the AI is the same thing, except this person is trading with statistical perfection each and every day. So keep in mind, these signals, the statistical probability is good for the entire day, sometimes the timing is just a little bit off. So it's not just the original signals that can bring value to the table here. A lot of the times it's some exit signals can be pretty entertaining and pretty profitable too. It just takes a little bit of time to get used to looking at them and sizing up the chart and going, well, can get a better price here, take the same or a little bit less risk, and the statistical probability is still good. So that's what we would call a trade around, trading something that the AI might have gotten stopped out of or reduced risk on. You know, let's go back real quick here to MAXR. Another good trade around opportunity because the AI signal was way back here. AI dumped the trade 30 minutes later, 40 minutes later, at the same price that it got in. So even if you saw this exit signal, you could have still gotten the same price or maybe even a little bit better than the AI. Same motif there. And yes, Santosh, this will be recorded and posted to our YouTube channel, probably about an hour after the webinar is complete because it takes a little bit of time to compile that video. All right, so that's a good example of a trade around. And let's see, let's just do a little time check here. Okay, moving right along. Now, paper trading, the AI, auto trading, the AI. You know, we've been getting a lot of questions about, okay, I'm all fired up, I'm ready, I got my account open at IB, I'd like to start auto trading the AI, okay? So if you're one of those people or you're thinking about doing this, certainly nothing wrong with that, okay? But I'd like to take a little bit of time here to kind of prepare you for what to expect if you're going to be going down that path there, okay? First and foremost, before you ever auto traded the AI in live money mode, you know, assuming you have the account that will facilitate or, you know, not be subject to the pattern day trading rule, just like a regular strategy, it would make a lot of sense to run the AI in paper mode first, okay? So what I did today is I had my AI running in paper mode as well, and these are the end results right here. Now, how many fills did I get? Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Well, I thought there were 14 signals over here, and there are. So why are there only 13 positions on my blotter here? Well, this is one of the things that happens when you go and execute live in any algorithmic model. You know, in this case, it's just our AI. Guess what? I didn't get a fill on the fast mover here early in the day, the AESE, this guy right here. Now, if we go look at my order summary, which is right here, click over to my orders tab, you can see threw the orders out, but did not get filled, simply because the stock was what we call in a fast market, okay? So this is one of the things that is actually makes our paper mode stand out. You know, a lot of the platforms out there at different retail firms, yeah, you can paper trade, you can trade in demo, and when you push the button, most of the times you're gonna get filled, okay? Which is fine, because hey, it is demo mode or whatever. But we've made ours a little bit more, I guess for lack of a better term here, realistic, okay? It would be just like the real market. AESE, and I'm using a very aggressive limit here, and if we go to my strategies, the AI, right? If we check out my long trading instructions, am I using a market order? No, I'm not. I'm using a limit order. Now, obviously, if I was running market orders, I would have gotten the AESE. I would have just taken some pretty significant slippage on it. And slippage is the difference between when the AI comes out and prints that price as the signal versus what you actually get filled at, okay? So in this case, even though I'm using an aggressive delta, which we can see right here, -8, which means it's gonna take that signal price, it's gonna add 8 cents to it, it's gonna throw my limit order out, okay? It worked on every other trade today, with the exception of this one because it had moved past my price, never came back, therefore, I did not get a fill. And this is one of the things that, you know, I'd really like to drive home here. When you go launch the AI live, these are some of the factors that can keep you from getting the results that the regular AI is showing. If you didn't get that fill, well, that's kind of a big deal there, all right? So just wanted to bring this to everyone's attention, you know, the difference between executing in a live market versus demo trading. But in the case here, even our demo mode, since the price had already moved past, it did not give me a fill, which is good because that's going to help you temper your expectations, be more prepared for live execution. So that's one of the biggest things that can impact performance if you're going to attempt to trade the AI in auto mode a little bit further down the line there. So that's first, missed fills there. Now we'll talk about hard to borrow here in just a second, but I would like to talk about slippage because it is definitely, if I had to pick a big factor here other than missed fills, I'd say slippage and missed fills are probably the top two that could impact performance there. So once again, let's take a look at my fill prices in paper mode here versus what the AI is showing in its trade blotter here. Let's just look at the ABIO. Did I take any slippage there? Now, keep in mind, this was a short sell, okay? So I got it at 9.91, but the AI was short at 9.99. So 9.99, I got filled at 9.91. So what does that mean? I took 8 cents of slippage today in ABIO, okay? Because the AI is 9.99, we want a higher price when we're shorting, so 8 cents of slippage on ABIO. Well, what about MAXR? We want lower prices since we're going long here. 15.92 is what the AI is showing, and 15.94, so 2 cents of slippage in MAXR. So that is also the other bit of good news about our paper mode, is it's giving you the real price, what it was at that time, and it's reflecting slippage, because I guarantee you in a live market there's always going to be slippage. It's part of the game. Now on a rare occasion it is possible to get negative slippage, but it's the exception and not the norm. So just keep that in mind as you move forward. If you had a real quick rip down on a stock, especially in these algo driven markets, it is possible to get a better price than the AI. It happens from time to time, but it is the exception and not the norm. Most of the time, your price is going to be a little bit worse than the AI on both your longs and your shorts. Yes, Glenn, spread is always going to be a factor. Of course, that's going to factor into slippage, right? Therein lies the kind of the catch-22. Well, if I want all the trades, I got to run market orders. But if I run market orders, the big spread's really going to get me, because every once in a while, you're going to run into a larger spread. All of a sudden, something opens up, quarter, 50 cents wide, you get that market order. You're probably just going to slightly increase your slippage average over the number of trades, okay? So, that's what we have to deal with here. Do we want to use a very aggressive limit with a high delta? Because, as I was showing back here, I like using -8. That's pretty aggressive, but not as aggressive as a market order. If I don't get it here, I just don't get the fill. Perfect example was the AESE, which, happens from time to time. It's a fast market and you just don't get it. So there's a trade-off. Slippage is going to increase with market orders. Slippage is going to decrease with limits, but you do run the chance of not getting filled. So pretty much on longs, you're always going to get filled running market orders, which brings up the next topic here, and it's dealing with stocks that we short, because we've got another thing to deal with here when we're talking about short sells. So when you go to short that stock, manually or robotically, it has to be borrowable from the broker dealer that you're doing business with. And if it's not, your order will get rejected. And sometimes it's a really nice short trade, but you couldn't execute on it because it was hard to borrow and order gets rejected. Now, from my experience at Interactive Brokers, their short list is pretty lengthy. It's very rare that we run into a hard to borrow rejection, but it does happen from time to time, especially in a fast market or some of the more thinly traded stocks. Technically when you short sell a stock, you're borrowing it from somebody in cyberland so that you can then sell it. And when you buy it back to cover and hopefully book a profit, then you're returning it to the person or entity that you borrowed it from. It's a little backwards in today's technologically driven marketplace, but it's still one of the pesky rules that we have to deal with. So these are some of the major things that can impact your performance when you start to automate the AI. Missed fills, slippage is always going to be a factor, missed fills, and then hard to borrow on the short sells. Okay, so these are things that you can't necessarily factor into the back test. You can factor in slippage. We do have a field for that in the back tester. But all in all, 3 very good things to be aware of as you contemplate going live on the AI in real time. All right, looks like you're doing a good question, keeping up with the questions there. If I need to go back and retrace anything, just let me know. But hopefully that's a little eye-opener for the AI crowd out there and the potential automation of the AI. And we got about 10 minutes left here, which is perfect time to give you guys a little teaser that Steve was alluding to earlier, okay? And it's this guy right here. There's a new exchange in town. There's a new kid in town, ladies and gentlemen, and it's called the Small Exchange. So I've already got this loaded up in the chat panel. All I gotta do is hit the enter button here. And if you guys wanna check out the Small Exchange, you should see the link in the chat panel there. And the Small Exchange is really cool. They just launched today after a couple of delays. And what they technically are futures, okay? But they're doing it in quite a unique way here. What they're doing is they're creating bundles of things, all right? So I pulled this right off their webpage, and you can go and view the same information here. These are the 3 products that are now live at the Small Exchange. Small Stock 75, SFX small US dollar, and precious metals, okay? So these are all gonna be futures technically, but the cool thing about what's going on here is these are not subject to the pattern day trading rule, okay? And for people out there that don't know what the PDT is, short and simple, sweet answer here, if you want to make unlimited trades, which is what you would need if you're going to automate the AI system, you need a minimum of 25,000 in your account. You can't fall below 25,000 in your account. If you do, then you're going to be subject to that PDT rule, pattern day trader, which I might be off by a trade here. Last time I checked, it was, I think you could make 3 trades a week, and you had to wait for settlement day to occur, and then you're good to go. You can make it 3 trades next week, where if you have more than 25,000 in your account, you can make 100 trades a day, 1,000 trades a day. There's no limit on the number of trades. So the cool thing about it is the Small Exchange is not any of the products that are traded there are not going to be subject to the pattern day trading rule. And even better, we are ingesting their data. Now, what does that mean exactly? Well, here's the simplest way to show you guys. So I just pull an alert window over here. I right click, I go into configure. And by the way, this is not, I just got the latest developers version, so it's probably not going to be on your production version, but hopefully soon enough on the next release, which hopefully won't be too far away. If we go to the exchange tab, just like you can select New York, ARCA, American, and NASDAQ, well, check it out. We got the Small Exchange. Since today was the first day, I'll give you a little peek of what I was looking at just to see the data flow. I had an alert window set up, just looking at new highs and new lows and things that were ripping up and down on the bid real quickly here. And got a nice little eyeful of things that were being traded here. I'll just show that history real quick here. So things are live, and we're populating our database with this information now as well. So you can see these 3 products hitting highs and lows, ripping up and down on the bids. Charts are populating as well. So if we click on them here, you can see today was the first day. Happy birthday to these products, day number 1, and the intraday action we can see over here. So this is going to open up a whole new world, a whole new product class, not subject to the pattern day trading rule, and we're going to be ingesting their data from now until infinity. So today only 1 day of data, but it's going to get real interesting when we populate the full history of 60 some odd trading days. It'll probably get real interesting after 30 or so. And not only can we start tracking these instruments and trading them accordingly, but we'll be able to back test them and start folding those into the rest of the product suite here at Trade Ideas, including Brokerage Plus. All right. So this is going to be really good. I'm excited to get started over there too. I need to open up an account and get rolling and get geared up for when we have more data, especially since there's no PDT rule. It's going to be very, very interesting. Of course, I did have a top list loaded up here too, but since we've got a lot of blank data fields right now, it's just basically showing me all the products, and I expect this product count to go up over time. But a new era has dawned, a new product class has been born, and we're going to be right here from the beginning and bringing more products to our user base and hopefully more profit opportunity as well. So pretty exciting there. So go check them out. Go check out their website that I dropped into the chat area there. You can see all the broker dealers where their products are available, and we'll all see how this goes moving forward here. All right, ladies and gentlemen, we are at the in 5-minute period here. I see a question coming through. Where is TI located? Well, our servers are located in Southern California, just right outside of, or just right inside of San Diego proper is where our server farm is located, right there on the backbone. We don't really have a physical location. We're one of the original distributed companies. We didn't really have to adapt a whole lot when this COVID madness set in because we were already all working from home from the beginning. That's the way we do it here. So don't really have an office. We've got a server cluster, and everybody works from their respective homes. So we're a little bit ahead of the curve on that one. All right, Scott, we're ready to go. If you're ready to walk us out and let everybody know how they can save a little bit of money on an upgrade or a new subscription, we're ready for you.
All right, yeah, thank you. Everyone should be aware there's a new ebook that's out that helps you out with earnings season. It's a lot of great advice in there, how to use earnings to your advantage. Just go to trade-ideas.com/earnings. It also includes some cloud links that you can put in your layout to help you out. As a podcast, we've got a couple good episodes out already this year. Stay tuned for the next one and get it delivered directly to your device by searching for Trade Ideas Podcast and adding us as a subscription. As a code, Holly Summer, it's good this month. Use it for 15% off your first month or year of Trade Ideas subscription or upgrade to premium. So if you're on standard, you decide you want to upgrade, use that code, or if you want to sign up for a new one, do that. You can follow Jamie on Twitter at QuantBot. Steve Gomez is at Today Trader. We've also got at Trade Ideas. Trade Ideas Pro is the Facebook handle to follow and like everything that we post and share with your friends. And also shoot any questions you have to info@trade-ideas.com. That goes into our help desk software. We'll have the recording of this up later on tonight or tomorrow. Thank you, Jamie and Steve. Have a good one.
Thank you very much, everybody. Happy trading. We'll see you tomorrow. Bye-bye.
See you tomorrow.